have Mr. Uday Tardalkar, who is the independent director at Rosemark, joining us right now in order to help us understand better exactly what's the importance of changing a change in the expiry date. What does it actually mean? Very good morning to you, Uday. Thank you so much for joining us in ET Now. And firstly, my talking point would definitely be about the fact that help us understand what's the importance of a change in the expiry date. What does it actually mean, and why is it of that significance?
Good morning. Thanks for having me on your channel. First and foremost, let's go to the root of this issue. What SEBI found during the last year, that most of the retail investors were losing money on option trades. And in that context, SEBI took several measures to curb that. In fact, when we talk about the retailers losing money on the options trading or a derivative market itself, we know the famous quote of GB Shaw when he said that lack of money is root of all evils. In stock market, it is lack of margin money which is root of all evils, and that creates the problem. In that context, SEBI thought it fit that for equity options, we should have only one expiry day per exchange. That's how this entire journey began, and so of course, SEBI also made those changes from the minimum contract size raised to 15 and 20 lakhs, and so on. Of course, the calendar spread benefit was taken away. Overall, SEBI is really worried in terms of the money which is being lost by the retail investor. Just to take you back to the last year, if you recollect, the joint, what you can say, decision by both the regulators, that is RBI as well as SEBI, they made it compulsory for underlying to take position in the currency derivatives. That actually helped a lot of investors to save money, I could say, because investors, one is lack of understanding the literacy factor. It showed really the kind of restrictions SEBI put in. So there was also a safety net which was created by SEBI by preventing those retail investors, those who do not have any underlying, because finally what is derivative? The root is always hedging. So in that context, SEBI took several measures in this context. And just to take it forward, the expiries were limited only to 1 day. That option was given to the exchanges, and of course Tuesday being picked up by BSE and Thursday being picked up by NSE. So that's how the whole context panned out.
Interesting that you say that. But tell me then, Mr. Tardalkar, what kind of benefits do you actually see accrue from this formalization which has now been proposed by the regulator?
The expiry day by its nature are very volatile, and that's what made the retailers lose money. Again, we have to understand when we talk about AI on a very broad scale. Of course, in the equity markets, our derivative markets, you already have algo trading, and all the investors, I'm talking about retail investors, they have a lot of skill set to make their strategies. But in this context, they cannot beat the algo trading, and it's quite obvious that the algo trading is much faster in terms of using the intelligence, and that made the investors lose money. And that's what SEBI thought it fit to restrict these multiple expiry days, which was creating huge volatility in the market. And in that context, this decision was taken by SEBI.
All right. Hi, good morning, Mr. Tardalkar. This is Shrishti also joining in. But of late, what the actions have been taken and the changes that have been made, that has impacted the overall volumes in terms of the F&O activity. Help us understand that. How are you analyzing that and going ahead with such steps being taken by the regulator and the exchanges? Do you believe that the volumes are just expected to go down from these levels?
Yeah, one thing is definitely what we should understand is intraday trading is always healthy in the market, and we always talk about liquidity. So higher the liquidity is better for the investors. Now, when these measures got implemented step by step, we saw reduction of the individual trading volume in derivative segment in the first month itself, that is around in the month of December, came down by 22%, and currently, as I understand, it has come down to almost 77%. So that's the impact it has made on the market. And let me also share with you my experience. I'm also conciliator for the capital market, which is registered with a lot of ODRs recognized by the exchanges. So we do get cases, especially in the currency market, where the investors do not understand what is the lot size. And in a way, when the positions are taken, they find it that there is a movement in the currency, whatever position they have taken, but the per lot, the fees they pay, their profits are wiped off. So this is actually lot of things being what we always talk about, the financial literacy. Here, the investor is lacking that knowledge, and that's what it has resulted now. And another example I can give you, I visit so many colleges. I find that a lot of students who may be undergrads or even postgraduate students, they actually play, I would say this word, in the derivative segment. Now, I just question them that this is so dangerous. It cannot be an investment. So what reply comes from their side is, if they want to do something in equity markets, they have to pay 100% for delivery. Whereas with the short, the kind of money they have, they can easily take calls in the option segment. Sometimes they make 1,000 rupees, sometimes they lose 1,000 rupees. And this is how they look at it. And let me tell you, not to undermine these students, they are expert, they make their own strategies. But again, it's not that healthy from the market perspective. But of course, SEBI had made several margin requirement changes over a decade or so. We have seen that, but these get settled once the guidelines are fixed. So I think gradual again there may be increase in the volumes little later.
Right. I just also wanted to understand, and given the fact that you are also primarily a part of all of this sort of a discussion that actually takes place, the fact that you've seen a lot of retail investors also actually end up burning their fingers, given the fact that we've only seen a sharp rise in the markets of late, and then now this correction, and most of them have actually not witnessed this such sort of a correction in the market, right? Especially the bulk of the investors that have actually started investing in the market post the COVID era. What's your take? What more can be done to actually protect the retail investors here?
Yeah, to be very frank, this is what we call Gen Z. Now, a lot of Gen Z actually entered in the market during the COVID period when we had this online account opening facility, and they got attracted. Gen Z has not seen the downfall of 2008 or even the Y2K at 2000. And this is the first experience for Gen Z. Of course, Gen Z also has seen how they have lost money with the what you call new economy stocks when they were listed. So Gen Z also is learning, because finally, as they say in a very lighter vein, that what you get from the capital market is experience. So they are garnering that experience, I believe, when they really talk about this. But let me tell you, what is SEBI's role here? When SEBI looks at these proposals, SEBI is basically what? SEBI is a referee. Like in a football match, if somebody violates, it gets punished with yellow card or a red card, whatever. At times, SEBI, as a referee, has taken a decision to close certain counters. Now, this is the exact thing what SEBI has looked for. And I think this is really a rope walk, and that's how SEBI comes with new ideas. They float it on their website, they invite suggestions, and based on that, they take that call. But again, let me tell you, just going back around 20 years or so, until 2001, in the equity segment also, we had two expiry days. NSE was on Tuesday and BSE was on Friday. So during that period also, whoever the retailers who had taken positions in the equity markets, they used to wait. Saturday, Sunday was very anxious period for them, because that time the settlement day was 5 days a week. So all open positions you're supposed to close on the 5th day. So in that context, investors were quite, what you can say, aware what exactly to be done. But in this derivative segment, the kind of volatility, especially on the expiry day, the retail investor really may get wiped off. And that's the reason they need to be careful. And that's the reason SEBI is taking such initiatives.
Right. Okay, Mr. Tardalkar, great to have you on the show today and try and, help us understand how the new SEBI norms are going to really impact trading volumes and the overall industry. Good to speak with you. Let's take a very quick break. Come right back. We've got lots more lined up.